The key to keep in mind is that Bitcoin is not competing with the dollar. It's competing with international real estate, global equities, expensive money managers on Wall Street, and any long-range investment that somebody makes. And so right now we're about $2 trillion in Bitcoin. It's going to 20 trillion, then it's going to 200 trillion, then it's growing 20% a year. And that capital is coming from overseas. It's coming from China, from Russia, from Europe, from Africa, from Asia, from the 20th century to the 21st century. So what's compelling about it is if the United States takes a position in the emerging crypto economy, if it buys up 10, 20% of the Bitcoin network, we're going to pay off the national debt. And so why wouldn't that be in the interest of the United States?
Bitcoin is at the forefront of a massive shift in the financial landscape, and two prominent voices are making bold predictions about its future. Michael Saylor, the CEO of MicroStrategy and a leading Bitcoin advocate, and Tom Lee, the co-founder of Fundstrat Global Advisors and a well-known cryptocurrency expert. Saylor, famous for his unwavering support of Bitcoin, forecasts an extraordinary future for the digital asset. He predicts that Bitcoin, currently valued at $2 trillion, could rise to a market cap of $20 trillion and even reach $200 trillion, growing at a remarkable 20% per year. Saylor highlights that the capital driving this surge is coming from across the globe, with significant investments flowing in from regions like China, Russia, Africa, and Europe. He argues that if the US captures just 10 to 20% of Bitcoin's network, it could eliminate the national debt, turning Bitcoin into a key strategic asset rather than just an investment vehicle. Tom Lee, widely recognized for his insights into market trends and cryptocurrencies, noted that, despite Bitcoin's recent dip below $80,000, Bitcoin's most significant gains often come in short, sharp bursts. He warns that attempting to time the market could result in missing out on its inevitable surge. According to Lee, Bitcoin is on track to surpass $150,000 this year, signaling that its recovery is well underway and poised for another explosive rise. Let's watch clips from Michael Saylor's and Tom Lee's explosive interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
Were you surprised that in the announcement over the weekend, the president mentioned other smaller coins like XRP, Solana, and Cardano, as well as Bitcoin for the Strategic Crypto Fund?
I'm not surprised. I mean, I think there's no way to interpret this other than this is bullish for Bitcoin and is bullish for the entire U.S. crypto industry. You know, there are conservatives that view the right path forward is just a Bitcoin-only policy because Bitcoin is a commodity, an asset without an issuer, a neutral asset, and there's no controversy. But the president's adopted a more liberal economic policy, and that's his right. He's president of the United States. I believe that the best thing for the country is to move forward with an enlightened, progressive policy toward digital assets. I think it's worth $100 trillion to the United States, and ultimately there's four different assets that people need to come to grips with. A digital commodity like Bitcoin, an asset without an issuer backed by digital power. A digital currency like a stable coin backed by a fiat currency equivalent. A digital security, an asset with an issuer backed by a stock or a bond so we can tokenize Wall Street. And then a digital token, which is an asset with an issuer that's backed by digital utility. I think everybody's trying to come to grips with that taxonomy, and as the market gets more educated, we're going to see more progressive, constructive policy engagement. The key to keep in mind is that Bitcoin is not competing with the dollar. It's competing with international real estate, global equities, expensive money managers on Wall Street, and any long-range investment that somebody makes. And so right now we're about $2 trillion in Bitcoin. It's going to 20 trillion, then it's going to 200 trillion, then it's growing 20% a year. And that capital is coming from overseas. It's coming from China, from Russia, from Europe, from Africa, from Asia, from the 20th century to the 21st century. So what's compelling about it is if the United States takes a position in the emerging crypto economy, if it buys up 10, 20% of the Bitcoin network, we're going to pay off the national debt. And so why wouldn't that be in the interest of the United States? I don't think anybody's ever lost money in the Bitcoin network holding 4 years. The United States' best investments are Alaska, Mexico, California, and Louisiana, and Manhattan. We're still holding them hundreds of years later. It's a nation state. So presumably, you want to buy Bitcoin, you want to hold it for 100 years. You know where the future's going. The AIs, the foreigners, the Europeans, the 20th century capitalists, they're all going to cyberspace. And so the United States has the ability to buy this for a nickel and pay off the national debt. It'll be the greatest economic program of the 21st century for this country. Bitcoin's not highly speculative to the 500 million people in the crypto economy. It's the best performing asset in the past 15 years, and generally the best performing asset every single year. My company's gone from a $250 million investment to almost a $50 billion position in 48 months. So clearly, there's enormous economic energy in this asset. It is probably the most certain thing in the financial universe if you have a long time horizon. The reason that there's so much support for a commodity like Bitcoin is it is an asset without an issuer. No entity controls it. No entity runs the network. No entity can change the protocol. No entity has enough power to impact the market trading of that protocol. That's actually why most of the focus is on the digital commodity. And that's what makes Bitcoin special. Satoshi was the insider. He left 1 million Bitcoin for all of humanity forever and walked away without ever benefiting. And that's what makes Bitcoin special.
Do you think that any other asset should be in the strategic crypto reserve?
You know, I think if you're looking out over the next 100 years, trying to figure out how do you capitalize a nation state or a country, what you want is a digital commodity. But if you have a sovereign wealth fund, then I think it's well within the rights of the leader of the nation to decide to put, proprietary assets, securities, tokens, and the like into it. And of course, the decision will eventually be made through a fairly comprehensive political process over the next 6 months. We have till July 22nd, when the digital assets framework and recommendations from the executive order are due on the president's desk. It should be interesting to watch what happens between now and then.
Bitcoin is not just another currency. It is the ultimate digital commodity, unparalleled in its security and potential. As global capital flows into the crypto economy, Saylor argues that the U.S. must act swiftly. Adopting Bitcoin could not only eliminate the national debt, but also ensure America's economic dominance in the 21st century. On the other hand, Tom Lee is watching the market shift with a keen eye. While AI stocks, particularly Nvidia, are experiencing a temporary pause, Lee sees this as a natural cycle, not a breakdown. With strong ongoing investment in AI, especially in financials and mid-caps, the next rally is on the horizon. As for Bitcoin, Lee believes it's simply going through its usual cycle, down, but far from finished. With increasing institutional adoption and significant players like Citadel entering the space, Lee is confident Bitcoin is on track to surpass $150,000 this year. The real question is, are investors ready to seize the opportunity? Let's watch more clips from the interview.
You said choppy. You said exactly this. You said choppy for how long, but then the S&P again starts moving. And this is not, I don't think, an obvious or a logical conclusion to have right now with all the bad news that we're hearing about these policies. Everybody thinks the market's headed lower.
Yes, but instead we could be bottoming, maybe this week.
And this is the choppiness you were talking about. And, I think you use a combination of fundamentals and technicals, obviously,
yes,
to get things right. And the reason for the choppiness was going to be the first 100 days of this fire hose of executive orders and everything else.
Yeah, that's right. It's kind of weighing on investors' minds. We're seeing it even in the surveys and CEOs because the tariffs and Doge are, the Doge is creating austerity. Tariffs are creating uncertainty. Businesses are maybe sort of sitting on their hands. This is why I think markets have been sort of sinking and momentum has done so poorly. But to me, Friday was a good day because, it was a bad news headline, but markets actually rallied.
So from here on out, you think we bottomed? Have we seen the lows already? Because we didn't get worse than, 5% on the S&P as far as the drawdown?
Well, I think investors are going to be kind of watching out of the corner of their eye because Friday is the jobs report. Last week, consumption kind of raised concerns that maybe we're slipping into a slower or downshift in speed. So if the jobs report's really weak, there could be some panic.
What is the fundamental and the technical backdrop for bottoming happening this coming week?
Well, I think the best way to define a bottom, and Tom DeMark has mentioned this before, is stocks rise on bad news. And so Friday was maybe the first sign of bad news, the market's bottoming, but I know our technician, Mark Newton, doesn't think we're there yet. He wants to see more signs of exhaustion, but we've seen sentiment turn negative. So maybe Friday, but it could have already bottomed too.
Outlooks, how about the AI trade? I mean, we've certainly seen signs of weakening, some skepticism there, especially surrounding NVIDIA, which hasn't filled in that pre-DeepSeek gap that it created. Where does that stand? How important is that for this next move forward for the bottoming process?
I think technology is still important for the next few years. In our sector weightings this year, it's number 3. So financials, industrials, first and second. But I think it's just digesting a lot of the prodigious gains the last 2 years. But I don't think AI spending is really going to weaken. I know investors have a lot of good news baked in.
So I think the market, if it does resume a move higher, you think it's the same leadership, or there has been some rotation away from some of the Mag 7, and financials have looked strong. Will it look different, or will the winners come back with a vengeance?
Yeah, in January, the first, let's say, five weeks or so, that leadership was different because it was a lot more tech outside of the Mag 7, and it was financials, and it was some mid and small caps. I think once we're through this rough patch, that's the kind of leadership we think will.
I don't know why we told people you were going to talk about Bitcoin, but now that we did, you do need to talk about it. It's come back a little bit. What did you attribute the move down below 80 to? Just that it's Bitcoin? What do you want?
Yes. I would say what's interesting is Bitcoin's not had negative headlines in February, but it was down. But I know our technician, Mark Newton, had talked about this being a cyclical downturn in Bitcoin through the end of March. So he was talking mid-January, getting down to 62. The weekend...
105 to 62. That's just Bitcoin.
Yeah, it's a typical...
Do the math, though. It's like, in a month, 105 to 62.
Yeah, that's a test of the resolve
that hurts
bulls, right?
People that buy at 105.
Yeah, but as you know, Bitcoin makes all of its gains in 10 days. So if people sort of try to time this, they're going to miss out on a chance for Bitcoin to go back to its highs.
And by the end, at some point in this year, you think it gets, because last year you thought it might get to 150 or even higher, right?
Yeah. I think it's going to do better than 150 this year because it's becoming more widely held.
Yeah.
If Citadel starts trading it, it starts to have more broad acceptance.
Okay.
Bitcoin's explosive rally continues, breaking past the $90,000 threshold despite recent volatility. After dipping below $83,000 following Trump's tariff announcement, Bitcoin has surged back, proving once again that it is the most resilient asset in global markets. As Michael Saylor and Tom Lee have both emphasized, Bitcoin isn't just another speculative asset, it's the future of digital wealth. Saylor has long argued that Bitcoin is competing with global real estate, equities, and traditional investment vehicles. With a market cap of $2 trillion and growing at 20% annually, he sees Bitcoin reaching $200 trillion, with capital inflows from China, Russia, Europe, and beyond. Meanwhile, Tom Lee remains bullish, asserting that Bitcoin's biggest gains happen in just a handful of days, making timing the market nearly impossible. His year-end prediction of $150,000 remains intact, despite short-term fluctuations. Institutional adoption is accelerating, with Citadel and other major players entering the space, legitimizing Bitcoin as a core financial asset. Even geopolitical uncertainty, which once sent Bitcoin tumbling, now serves as a catalyst for its growth. The question isn't whether Bitcoin will sustain these gains, it's whether investors recognize the opportunity before it's too late. As Bitcoin continues its push towards 6 figures, the market is at a critical juncture. Saylor sees it as a hedge against traditional finance, while Lee sees it as an unstoppable force of economic transformation. The financial revolution is unfolding. Are you ready for the ride? As we wrap up, Do you believe Bitcoin's recovery past $90,000 reflects its growing resilience? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to like and subscribe.